Welcome to F.A.C.E, Kevin Wadsworth. Asking you to unmute. It's a drop-down menu there.
Yeah, I've got it. Thank you, Dave. Dale,
you've got it, Kevin. All right.
It's great to talk to you. Sorry about the technical glitches there, but yeah, thanks for inviting me on. Great to talk to you.
It's really, yeah. See, I told you that it would all work out and we'd get you in here. Do you want to share your screen? Is that green box on the drop-down menu?
I can, yeah. Okay, just bear with me and I'll do that.
So, you know, before we get into the markets, and I saw a real interesting, lot of work on a tweet where you were showing saucer bottom in gold and maybe a cup and handle forming. But usually, you know, I take people back to, you know, how they got into the business, knowing a little bit about your background. Was becoming a meteorologist, when did that become your aspiration of something that you wanted to do? Were you a young guy or?
It's one of those things. Living here in the UK, we get just about every different type of weather coming at us from all different directions: snow, wind, heat waves, all that kind of stuff. And it just caught my interest. And yeah, a little bit of fog.
Yeah.
But no, as a kid, I was interested, and as I grew up, it became a little bit of a hobby of mine. And one thing led to another, and I wound up getting a job for the UK Meteorological Office, and that's where I've been ever since. Many years working as a forecaster for military and civilian customers, Royal Air Force bases around the UK, and also delivering forecasts to the civil contingency community now. So yeah, a little bit of broadcasting, a little bit of radio and TV thrown in at times as well. So yeah, it's all been good.
So is a forecast in the UK heavily COVID with
yeah, we got scattered outbreaks for COVID, and yeah,
maybe the rain will wash it away. You know, Kevin, I've known people that were meteorologists, so I have to ask you if this is how trading happened to you, because a lot of the meteorologists that I followed earlier in my career were grain traders, and they or some type of agricultural product, because they could see patterns developing and know about La Nina and El Nino. Were those markets one of the first markets you tried because of your background of forecasting weather?
No, I fell into this through the financial crisis, and sort of around about the early 2000s and leading up towards 2007. So I fell into it looking at gold in particular, and looking for somewhere to invest my my hard-earned money whilst not really trusting the financial institutions. So that's where my interest started. Yeah.
Okay. You can't eat gold though. You know that, right? All right. Anyway, Ken, I told you we'd have some fun. So I believe this is kind of the look that you were, no, it wasn't the exact tweet, but so you're viewing this current level here in gold as important support, and if it gives way, we could see 1700. Am I interpreting it right?
Yeah, that's right. We're in a downtrend channel with gold, and we had what was sort of quite widely sort of touted as a breakout. But I think I said in one of my tweets that we needed to close the week above that declining. Well, it had turned into a support line, hadn't it? But of course, we didn't close the week above that. We returned back under the support line. It's now resistance, and we come down to the supporting moving average there, the 200. Moving average, and we're kind of bouncing off that. It sort of coincides with the inclining trend line as well. I've got marked in red there, so there's a clear sort of area of support and some horizontal support in there as well. So that kind of zone where we are now, it's providing some support. If that gives way, then quite clearly it's down to the bottom of the channel, which may coincide with a dotted red line there somewhere around the 1700 level. So I think, as your previous guest there was saying, it's a little bit of a case of, you know, the jury's out at the moment. It could move up from here and break out. Could just as equally have one more plunge in it. So I think some of the cycle analysts are looking to see another daily cycle before delivering the verdict.
Okay, so is this the time frame that you come up with your ideas and then drill down to shorter term TFs for entries and stop levels, or do you really just trade off a daily? Some people still do it.
No, well, so if I just pull up a chart here for a sort of longer term picture for gold, and I'll just give you an idea of what I'm kind of looking at and how I'm seeing this. I mean, my basic starting point is to be on the right side of the trade in the long term. So where we're looking at the long-term trends, long-term trend analysis, and that's where my weather forecasting experience and background comes into all of this. So this is a chart that I've been developing on Twitter over a number of.
Oh yeah, that's the one I saw. Okay.
This took quite a lot of work, and it came out of a realization many years back that, of course, all of these things have trading cycles. There's nothing new in that, and gold happens to have an repeating 8 and 16-year cycle. And that coincides very nicely every 8 years with the elections. The intermediate election years are marked on here as well. But we get an election low, if you want to call it that, an 8-year cycle low every 8 years, as they're numbered here: 1, 3, 5, 7, 9. And of course, we've just moved through the latest election point here. So 11 was an 8-year cycle low, and the next one's due at point 13. Put the number up in the right place. So point 13 is in November 2024. Now, the intermediate 4-year elections, they can occur during an uptrend or a downtrend. And so what's happened at point 12 is midway between those two 8-year cyclical lows, and we were pulling back into the election. So history sort of leads us to believe that if that's the case, then the next move is going to be upwards into the point just ahead of the 8-year cycle low, and we plunge down into that low, a little bit like we did here at point number 9 in the 2008 financial crisis. It was, wasn't it, that coincided with the election low there. So, and these arcs are very common as well. They occur over different time frames, different commodities: gold, silver, individual stocks, even Bitcoin. In fact, especially Bitcoin, as it turns out. So you can trade off these arcs. Once we get a hit on the right-hand hemisphere of the arc, you become much more confident that the arc is in place and is going to continue guiding you all the way to the top, which is just what's happened with Bitcoin and Ethereum, Litecoin, and many of the other cryptocurrencies as well. And these arcs are incredibly reliable, as it turns out. What happens as you exit the arc? Well, that is variable. You can develop a handle, or you can just develop a small pullback and then accelerate upwards, and that depends where you are in the cycle. And that goes back to a little bit sort of analogies with weather forecasting as well, a little bit like the seasons.
Okay, that is interesting. So here we are in winter, and you're looking for this saucer bottom to put in some type of handle here before we explode, or we could just go at any time. What would give you the confirmation that we're on our, well, it looks like you're looking for it right here from these levels. So what would constitute a breakout? New highs over 2070?
Yeah, so what we need to see is a move above this sort of channel, and as we mentioned, silver has moved above the channel, and in precious metal bull markets, silver very often leads gold out of the sort of bear market lows, and silver junior miners have been very much doing that over the last few months as well. So we need to see this move just above this sort of trend channel line here, and this sort of zone around about 1930 would be of interest. It's a horizontal sort of area of resistance as well, and that would lead us up towards the that psychological 2000 level, and would start seeing 2000 as a support line rather than a resistance. So that's what I'm looking for, to confirm that we're not going to see a deeper handle forming. It's not unheard of to see these handles pull all the way back to 30, 40, or even perhaps 50% of the entire move from the bottom. But that tends to happen when you're moving in towards a major cyclical low, so an 8-year cycle low. So if we had the 8-year cycle low coming up in 2021, 2022, I'd be looking for this handle to pull all the way back down here and then accelerate upwards. That's not the case, though. The low's not due until over here in 2024. Lots of time yet to move upwards and accelerate upwards over this year, next year, and quite possibly the first part of 2023 as well. So I'd be optimistic, and I would lay the odds something like I suppose 75 to 80% probabilities of breaking outwards and upwards during the next month or two, leading through into the summer. And only probably around about a 20% probability of seeing this handle pull back down below the arc. And this is the key level here, where we see the cup or the arc sort of support level around about that 1700 or just above. If we pierce through that, then that changes the picture completely, and we could see something pulling back down towards the 1500 level. But that's not my expectation.
Okay, so 1700 is kind of your bull bear line.
It is really, yeah.
Okay. Any other asset class or instrument that is part of your bailiwick?
Yeah, keeping a close eye on platinum over recent months, and waiting for a signal that the trend is changing. And all of these, by the way, are signs of a developing commodities bull market. We're seeing multiple breakouts across multiple sectors. Copper is one, platinum is another, and uranium is another. This is the platinum chart, and it's really a very simple chart. Don't really need to add too much to this, really. We've got a simple breakout on the log chart for platinum, with a nice convincing candle moving straight above. Back, if I get the line in the right place, that's a back test there, just ongoing at the moment. So we're on the right side of that line. It's acting as support now, and I expect to see platinum moving considerably higher again over the coming weeks and months. I mentioned uranium, and uranium futures is a chart that I've been looking at very closely, because I'm quite heavily invested in the uranium miners at the moment, and they've not been doing too well over recent years, but of course they've moved up very nicely now with breakouts with firms like Cameco, GovEx, Fission Uranium, Energy Fuels, all doing extremely well. And I think I'm well over 100% up on all of those. I bought in at the breakout. And this is what I'm sort of using as my roadmap, if you like. And I think it's really important to have a roadmap so that you know when to get out of the trade, because getting in is one thing on a breakout, but you have to time your exit very carefully as well. It's no good if you give back 50% of your gains or even all of your gains. So what we can see here is a very cyclical nature to the uranium market over the last 3 or 4 years. And there's a peak sometime during the sort of winter months of the year, sort of November, December through to around about February. So at the moment, we're in that uptrend sort of spell where going on what's been happening with this channel, and I accept the point that we broke out of the channel there, but in general terms, this is a rising channel. So somewhere up around the perhaps 35 to 38 sort of level, depends on the angle of ascent, I suppose. And as we get towards the psychological 40 level that I've heard a few people talking about as well, we're either going to get a rejection or we're going to get a breakout. And a breakout here would signal really, big things.
Acceleration.
It really would, yeah. Because if you look at the long-term chart, if I just zoom out a little bit, you can see just how much the uranium market has been pummeled over recent years. It's way down. So really important decision point coming up in a few weeks' time for uranium. But I've been tracking.
I need a Geiger counter when I'm looking at this chart.
You'll need a Geiger counter if it breaks out here, because the whole thing is going to go radioactive.
I've had enough radiation in my life as part of a cancer treatment. Anyway, so
really?
So uranium. I'm getting more and more people talking about it for last year. So it's definitely becoming not as esoteric. So I'm very interested in your look in the dollar. I'm glad you pulled it up. So why don't we wrap it with what you're seeing here? You're looking for a dollar low in 2024 or so as well.
Yes, so the cycles all tie in, of course, and this is a chart I've been working on for many years, actually, Dale. I think several years ago when I first put this chart out there, it was met with a lot of skepticism, and everyone was looking for 160 on the dollar index. I'm a charts guy. I'm a sort of meteorologist who finds patterns and spots patterns and repeating cycles, and I don't look for the fundamental arguments to support the pattern, because there are so many arguments for and against the dollar going up, the dollar going down, milkshake theory being one of them, of course. And
what is that milkshake theory?
Just don't ask me. It's a theory that involves dollar demand around the world, and how dollars come back to the United States, and all.
That's okay. That's a bullish argument for the dollar milkshake.
Yeah, it is. It is a bullish argument for the dollar going, 120,
skyrocketing,
that kind of thing. Yeah. So, but the chart just doesn't support that. We're ignoring all of the crazy arguments and well-reasoned arguments. We've got a very repetitious cycle since the 1970s, when we came off the Bretton Woods Agreement. You can see how the dollar settled with a cyclical bottom here in the early 90s. It then peaked and formed a domed top, and then it bottomed again, forming a domed bottom, and then it peaked again, forming another arc. And this is the one that was controversial. A lot of people sort of thought this was, pointing up here somewhere. And we briefly just pierced through the arc there, which had a lot of people panicked, but I stuck with it and brought the chart back into circulation.
That was COVID, right? COVID?
Well, we've got the March Madness, haven't we, which is down here somewhere from March 2020. So it was, I suppose. It does.
It was a COVID spike, and now we're here at major support.
And
so if we could still have maybe a bear market rally, Kevin, if you go shorter term, maybe back to 95 before the big decline.
Yeah, you can see these 10-15% rallies that occurred after we broke this uptrend line. You can see the uptrend line in the previous big dollar bull market. Once that uptrend line was broken, price tried to hang on to that line, but it failed. It lost its grip. And what's just happened here, the price has tried to hold on to the uptrend line from underneath once we broke below it. And it's acting like a magnet, just like it did back then. It's a magnet trying to pull the price back, but the forces of gravity that are pulling us down into this dollar cyclical low here are starting to take over now. So every time we get a rally, in my view, it's a bear market rally, and it's to be sold. And this is where we're heading down here. Something is going to happen in 2023. Last time we saw this bounce out of the bottom here, it coincided with the 2008 crash. So I'm very, very aware that we're going to see something not good happen around about this time frame, leading into the because if you remember the gold chart, we've got that 8-year cycle low in 2024, and it ties in with the type of bounce in the US dollar that we had here. So something's going to happen here. I don't know what. Just a heads up, something to be aware of.
And that's what, the end of 23, beginning of 2024.
And that depends how left or right translated the cycle is. But I'd be looking at 2023 as a year to be extremely cautious. Whether it's
that could be perhaps the end of the bull market in equities. It
could be, it could be some kind of liquidity financial stock market collapse of some sort. But,
I know some Ellioticians that have been bullish in market for a long time, and are talking like 4,600 S&Ps and stuff. And then one in particular thinks a year or two from now we'll enter a generational bear market. So anyway, that's I bring people on like you for not just to educate and edify the community, but you're also doing that for me, Kevin. I really appreciate you coming in, and I'd love to have you back if you're open to it. And do you have any kind of business model? Do you help people trade, or are you just tweeting to kind of give people your views and have interaction, and you don't have a business model besides trading your own account?
So I'm doing all this in my spare time as a hobby. People can find me on Twitter here. It's at Northstar at NORTHST 1836337. That's my Twitter handle.
Why all those digits on your handle?
I should have looked at it more closely when Twitter assigned all those numbers to me. I think I'll probably be able to get those changed, but due to COVID, Twitter aren't helping much at the moment.
Okay, yeah, I was wondering if there was some type of method to the madness.
I've recently,
or you were trying to give your phone number out to, women that are trying to con men on Twitter. I'm lonely. Huh? That's happened to you?
one thing worth mentioning. I'm really amazed that I've got this many followers. I'm absolutely humbled by the fact that it's just ticked over to 30k whilst I've been on air, actually. But I've recently joined forces with @BadCharts and Silver Chartist on Twitter, and Silver Chartist has an incredible free newsletter, which I would encourage people to go to my Twitter feed, click on the link, and you can sign up for the free Silver Chartist newsletter. If you like all this kind of analysis, go straight there and get more detailed information for free, and go for it.
That's Patrick, right?
Patrick is helping, and this is Steve who writes the newsletter. So me and Patrick are affiliates, and we're contributing now, and we're working as a team of 3 to try and help people.
Yeah, for that triple-digit silver coming down the line.
It'll be coming down the line, and Patrick is getting very excited, as anyone who follows him will know.
We'll have to peel Patrick off the ceiling when silver breaks 100. So go ahead.
Great guy. He's a great guy, Patrick. It's nice to be working with him.
Yeah, well, the law of attraction. 2 very good technicians, you and Patrick, and I really like your work, and really I appreciate it, Kevin, that you were able to come in here today, and I'll get back to you later, and we'll get something on the schedule for the spring, and
that's great, Dale.
See how things are happening. And thanks for giving us the weather forecast of the markets, because we're all forecasters or professional guessers. Or tacticians is a word that I like. And what happens to people that survive an interview with me?
I don't know.
You become my trading warrior brother, and you can't get out of it. You can't get out of it now.
Blood brothers, brilliant.
All right, buddy. So everyone, you know where to follow Kevin. Definitely Dollar Bear, Precious Metal Bull, and here's a guy that uses a telescope and a microscope. You need both tools, don't you? I mean, as a weatherman as well, you look at the big picture, and then you have to dial in and look at the microclimate as well.
You've got it. That's exactly it.
All right. Well, everyone, Patrick, this has been a great interview with Kevin Wadsworth, and you know where you could find him. And again, thank you so much for stepping up and being a great pinch hitter today. I appreciate it very much, Kevin.
You're very welcome, Dale. Thank you very much for having me.
Okay, everyone, that's a wrap for Turnaround Tuesday. Good hunting, and remember, don't just count your pips, count your blessings. See everyone tomorrow. You're welcome, Sonny, Tom, Laura, Jorge. I'm glad that you guys enjoyed Kevin. Adios.